Welcome to Pink Digital News. If you are new to the channel, please click the like button and subscribe and share the video. It's now time for Crypto Shorts, brought to you by Pink Digital. Fed adds a new layer of bureaucracy for U.S. banks engaging in crypto asset activities. The United States Federal Reserve Board issued a letter on Tuesday to its supervisory officers, staff, and the banks they supervise regarding activities with crypto assets. The letter covers the preliminary steps a bank must go through before engaging in activities with crypto and instructs banks to notify the board before proceeding with those activities. The letter, signed by the directors of the Regulatory and Community Affairs divisions, applies to all banks supervised by the Fed with no threshold of minimum assets. It begins with a warning about the risks associated with crypto, specifically mentioning evolving technology and its governance, anti-money laundering and transparency, and the stability of assets such as stablecoin. It went on to remind banks that they need to make adequate risk management preparations for activities with crypto assets. It also recommended checking state and federal laws on the legality of their plans and required filings, mentioning the Bank Holding Company Act, the Homeowners Loan Act, the Federal Reserve Act, and the Federal Deposit Insurance Act in particular. Colombia explores creating a CBDC to combat tax evasion. Colombia is considering the introduction of a central bank digital currency CBDC to facilitate transactions and reduce tax evasion. The information was confirmed by Luis Carlos Reyes, head of the Colombian Tax and Customs Office, who did not provide details on the proposal in an interview with the local magazine Semana on Monday. As part of a tax reform program pushed by President Gustavo Petro, who took office in early August, the government also plans to ban cash transactions for amounts surpassing 10 million Colombian pesos. That's $2,350. Reyes said one of the important objectives is that when payments are made for a certain amount, they will be recorded in an electronic medium. Colombia joins other Latin American countries working on their respective CBDCs, including Brazil, Mexico, and Peru. Crypto.com secures FCA registration. Digital asset exchange Crypto.com has received approval from the UK's Financial Conduct Authority to conduct crypto asset activities in the UK on Tuesday. Forest Dax UK Limited, Crypto.com's trading name, has been added to the FCA's Financial Service Register after meeting the regulator's anti-money laundering standards. In April, the FCA issued requirements for crypto firms to meet the same anti-money laundering and terrorist financing standards as other financial firms. Prior to Crypto.com's successful registration, the FCA has only approved 36 out of the 248 crypto firms seeking registration to operate in the UK. The FCA's stringent registration standards come in light of the $14 billion in illicit activities carried across the crypto space, reported by Chainalysis. Chris Marszalek, Crypto.com's co-founder and chief executive officer, said that the registration marks a milestone for the firm. The UK represents a strategically important market for us, he adds. Ripple targets Japan Thailand remittance corridor. In a new partnership with the SBI Remit, RippleNet has launched a remittance payment service for the Japan Thailand corridor. The Ripple SBI Remit partnership will introduce RippleNet technology to Japanese-based Thai origin workers who want to send money back home in a streamlined and cost-effective manner. Since SBI Remit is Japan's largest payment provider, it will give Ripple access to a large pre-existing user base in the country. The Siam Commercial Bank will be handling the Thai end of the venture. Thanks to the technology, SBI Remit's customers in Japan can use ATMs to send money in Japanese yen to an SCB savings account in Thailand. The recipient will receive the funds instantly and in Thai bahts. The service will eliminate the need for any intermediate agency or individual. Huobi halts derivative trading in New Zealand. Huobi Global, a Seychelles-based cryptocurrency exchange, has announced its temporary shutdown of derivatives trading in New Zealand following new crypto regulations put in place against derivatives trading. According to the statement posted on the Huobi website, the derivatives trading will shut down starting August 23, and on the same day, Huobi will no longer accept users in New Zealand to access customer-verified locations alongside IP addresses addresses. The statement read in part, Huobi Global will cease intake of users with New Zealand KYC and IP addresses effective from the 23rd of August 2022. Huobi Global will disallow New Zealand-based users who do not hold any derivative positions from opening new positions effective from 23 August 2022. In compliance with the policies set by the regulators, Huobi says its commitment to implementing them and the suspension of its derivative trading aims to ensure the safety of consumer assets. Solana wallet fires up the grill to burn spam NFTs. Solana-based wallet provider Phantom has launched a new burn feature allowing users to remove spam, non-fungible tokens NFTs sent by scammers. According to a Thursday blog post from the Phantom team, the new feature is accessible via the Burn Token tab in the Phantom Wallet app, allowing users to receive a minuscule deposit of Solana SOL each time they use it. Phantom noted that the issue has been particularly prevalent on Solana due to its low transaction fees, with bad actors often airdropping supposedly free NFTs en masse which contain malicious links. Spam NFT generally prompts the receiver to click a link to mint a free NFT. If they complete the process, however, their funds end up being drained from their wallet. Alternatively, the link will ask the receiver to input their seed phrase, resulting in the same outcome. The move is part of a broader initiative by Phantom to counter spam NFTs and bad actors in the space. The team stated that it also fights scammers through its phishing warning system, which issues warning to users on any malicious transactions that could compromise their assets or permissions after clicking on dubious links. And finally, South Korea to block foreign crypto exchanges lacking permit. South Korea plans to block domestic access to foreign cryptocurrency exchanges that lack the proper registration to operate in the country and could launch a probe into the companies. An intelligence unit of the Financial Services Commission has reported 16 foreign crypto businesses to the nation's investigative body and asked other agencies to block access to the firm's local websites, according to the statement on Thursday. The statement listed the companies as KuCoin, MEXC, Femex, XT.com, Bitrue, Ziwi.com, BitGlobal, CoinW, CoinX, AAX, ZoomX, PoloNiex, BTCX, BTCC, DigiFinex, and Pionex. Officials intend to report violations to the countries where the companies originate from and will seek to isolate them from the rest of the local cryptocurrency sector if they fail to get the requisite permits. Legal measures that came into force last year require all crypto exchanges operating on South Korean soil to apply for licenses. This complicated process involves obtaining information management certification from a government-run tech agency and striking deals with domestic banking partners. This is an almost impossible task for any firm that is not based in South Korea. People operating unregistered illegal businesses face prison terms of as much as 5 years or fines of up to 50 million won, $37,900 according to the statement. They can also be banned from registering a company for a certain length of time. That's it for Crypto Shorts, brought to you by Pink Digital. Please share your thoughts in the comment section below. Don't forget to like and subscribe for more content. Thank you for tuning in. Pink Digital News, signing out.